Welcome back to the channel, folks. This is daily update for Xela stock. And there has been question about, the integrity of the company right now, that whether this company is going to be a great turnaround story or this is a dead end right now. Whatever you're investing with, are you going to lose everything here, or are you looking to make, it's going to be a fortune for you guys? So let's take a look at some of the facts that what Xela is trying to do here to survive, and whether are they going to survive that or not. We're going to put it in perspective, and I'm going to take you guys' opinion as well at the end in the comment section. So let's talk about the first thing they're trying, right? So they were able to get $51 million in new funding. As we all know, that was about two weeks ago or so. So they got this $51 million funding. Now that's going to help them breathe a little bit, okay? That's their first shot. The second shot they have is they said they released a press release on March 6th saying that they're going to save 65 to 75 million this year. Now, if they do that, that will be really substantial for the stock, because the company right now, cash flow looks really, really terrible, which I'll show you guys in a second. Now, they need to save that money, right? This is because they're releasing this press release to lure in more investors, because they are running out of cash right now, okay? Now, the third thing they're going to do is they're going to do a reverse stock split in May. And what are they going to do? They're going to convert the one stock for 100 or one stock for 200, depending on what the price is. For example, if the price is 4 cents, if they do 100 shares or 4 cents, that's $4. So let's say if they do 1 for 100, okay? The minimum, bare minimum is 1 for 100. So if the stock goes to $4 right now, right? Would you buy the stock? My question is, given that the company current state and how the cash flow of the company is right now. So they're not making any money. Their cash flow is negative. Operating cash flow is negative 124 million. That means they are not profitable whatsoever. And investing cash flow is whatever, if they're investing in another company, or they're investing in stocks, or they're buying something, for example, that's negative 22 million. Financing cash flow is the money they're raising from the stocks right now, because stock price is so down that they're only able to obtain 22 million from it. And cash position was 45 million. If you do the math right here, 124 million, you won't be able to cover your expenses even for 2023, which is why they received that $51 million amount. This is going to help them at least stay course for this year. But if they do the reverse stock split, right, looking at these factors, what would be your take? Leave me in the comment section. Would you buy Xela for $4, given that it's not a growth, but it's a reverse stock split, just to be complied with the NASDAQ exchange? I personally, I'm trading the stock, so I don't really care about if they're going to $4 or not, because for me, it's not a matter of investment. For me, it's very clear that I'm not invested in the company whatsoever, because the company needs to demonstrate a good cash flow for me. Any company for that matter has to have a good cash flow, because cash runs company. And if company doesn't have cash, they could take, again, if they're borrowing loan, for example, either they're giving up securities, in BBY case, they're giving up securities, diluting their stock, or, they have a very high interest rate, things like that. So they have to have a lot of cash on hand for me, for the company that I want to invest in. That's my criteria for investment. Trading, yes, fine. Whatever is traded, whatever is hot, I will trade. But for investment, I'm very careful. But I'm not invested in the company. I'm just trading the stock. So now, with that being said, let's take a look at their earnings per share as well. Earnings per share, negative 10, which means, earnings per share. Whatever earnings you would get per share that you buy for this company, you're not making this, negative 10, okay? Which means earnings per share is negative. So once you put in $1, ready to lose that dollar, because it's not going to give you anything, is going to go in negative. Average volume for the stock traded is 156 million. The reason that the stock volume is so high is because all this hype, people investing in the company. However, they were at $10 in 52-week range, okay? That was some time ago now, right? They're down to 4 cents. If they do the reverse stock split, they're going to go to $4. So you need to ask yourself, am I ready to invest in $4 or not? So that's the question that, I leave it for you. But for now, the stock is steady coming down. I've been making videos on this, and if you are following me, if you're subscribed to the channel, you would know that I have these levels before, which were demand levels. Now they're supply. Supply demand is basically, this is how the stock market works. Demand is where the price, for example, you are trying to buy a stock, okay? You would have certain price in your mind that, okay, if the stock gets to, $1, I would get it, or stock goes to 50 cents, I will get it. This is what we call demand level. When a lot of investors come together and they're like, you know what, this price level looks really good, that becomes your demand. And when there's a lot of sellers are coming and they group together and they're like, you know what, I want to sell the price right here. I want to make profit at 52 cents, or 5 cents or 10 cents or whatever the case is. When you have a lot of them come together, that's where, you have your supply. So right now their demand levels became supply, which was 5 cents or so, which was around 5 cents. 4 cents we have a demand, but it's gone down to like 4, almost like, it's like exactly 4 cents is going down to. So the price does work in a zone. So this is a zone right there, but I do feel the stock is steady coming down. I'm leaning on 90 to 10%, which 90% being the company is not going to make it. 10% is that, there might be a chance for the company to turn around. So, but I'm still making videos on this. I'm still trading. I'm still trying to make money, still trying to get that squeeze in. The off-exchange short interest is really high, so we want to catch any momentum that comes our way. But for now, these are the updates. If you're new to the channel, do consider subscribing. I'll talk to you guys in the next video.